Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Thursday, 16th day of January 2014, and this is the daily report for gold and silver. We have mixed bag in the precious metals markets today, with gold currently trading unchanged to up about 70 cents. As you can see, 1242.30, that is the current print. The low has been 35.90 and the high is 46.40. Silver is currently trading off about 10 cents on the day, or a 0.5% lower. The low today is 19.91, the high 20.34, and the current 20.07. Want to talk a little bit about the most recent high, Tuesday's high that we had. We showed it on our daily chart just at around 1250. But when looking at some of the intraday studies, I find that our prints came up to almost 2060, not 2050. And if that is the case, stops would have been hitting that were just above 2051. We'll talk about that as we update our silver towards the end of the show. I was taking a look at our 240-minute chart. That's the chart that I have up right now with a couple of different fib retracement levels. As we look at this chart right now, it's sitting at 42, and we have identified some distinct areas. What you're seeing here, as we compress the chart, you'll get a better idea, is multiple fib retracements. I'll show you each of the price ranges that encompasses the fib retracements, and we're looking for harmonics. In other words, we're looking for points in which more than one time cycle comes out with the same conclusion. And to do that, we'll go ahead and compress this chart a little bit more so you can see where all these numbers come from. And let's try to compress it like this. Perfect. So when we look at this chart, we have basically three. One that goes from 1360 down to 1185. We also have one that goes from this top here, which is around 1300, all the way down to this bottom again, 1185. And we have a third one that goes from this high, just at around 1300, to about 1211. Now, I've added one more, and the last one that I've added simply encompasses this range right here, this last rally, and that's the marks that we see right here. Let's go ahead and move that over just a little bit so we can try to get all of the numbers in that we can. And what I notice is that we have one area which is roughly at 1227, 1228, that gives us a dynamic harmonic, because when we look at it, what you will see is that we get three different retracements in terms of the sequence, all pointing to the very, very same price point. 23% retracement, and this is the retracement from here to here, meaning the rally itself, and then our longest term, 1227, and then a 38% at 1228. So we have three out of the four retracements all pointing to this area. 1227 has become a pretty important number. The other harmonics that we are seeing is a 61% retracement at 1211, as well as a 23% retracement at 1211. So in terms of the harmonics that I feel have the most important information, 1227 we get really a triple harmonics, and then we get a double harmonics here at 1211. Now, that's on the support side, but we have seen this market trade above another support level. We do have a harmonics sitting roughly at 38, and I believe it's 38 or 37, 50% and 23% right in here. And that's at, as I said, 38. Now, when we go ahead and blow the chart up, and you'll see why it's kind of important, we can clearly see that we made these lows in trading last night just below 40, 35, 36 in that area. That's these lows right here. But the market is firm just a little bit. It's gone back to unchanged in essence. And when we look at our current placement, that 23%, you can see that we have all of our intraday work well above that point. So the question is, will it find any kind of supportive activity here, or will it be more like the dynamics that we saw where we get the market peaking above these particular tops, trading up to but then breaking down lower as trading progresses. And we've had that in these three occasions. We've had this extreme top up here, but when we look at these last three tops here, you can see that they just kind of faltered right at about this point. So we'll have to see how it unfolds. Of course, we're sitting short at 1245, stops at 65. We will be looking to move those down probably tomorrow. Want to see how this market closes, but it does appear at this point that it's going to close roughly in this area. We are looking at a 720-minute half-day standard candlestick chart. And on the shorter term chart that we just looked at, the 240, it was pointing out very, very minor levels of support and resistance. And as we move to more and more compressed charts, meaning half-day, daily, two-day, weekly, what happens is we then start going to intermediate and more long-term support and resistance. What we see when we look at this chart, of course, is that we do have resistance. This resistance right now is at 1245. That is a 23% retracement. It's a retracement from our move of 1435 approximately down to, call it 1182, 1181, right in that area. And when we do that, we get this 23%, and then the shorter term of the two fib retracements gives us another top at 1253, and of course that has been our top. We can see that on two occasions. On the first occasion we came up, this particular resistance line held, came down to support, which is 27, then came up, broke through the 45, but stopped at 53. And now, as I said, we're just trading below the 45. We're trading at about 42. So my sense is that I would look for, we've had a series of, on a very, very short-term basis, of course, we've had these higher lows here and higher highs. The market has rallied. There's no doubt about that. The real question right now is, will this become and hold as resistance? This little bit of firming doesn't bother me so much, but I do want to see if the market does start to break back down, especially at 1227. I want to see how the market reacts there, because that's got that triple harmonics in there, and that could be a decisive area. That, below that, 21, and then of course 1211. Now I've pulled up a two-day chart. It is the chart that we have our current intermediate Elliott wave count. We also have a couple of fib retracement points. Of course, wave 4. We're currently in wave 5. We're looking at 1, 2. I do believe we've completed 3. And now we're trying to determine whether or not we've completed 4, or if this rally which began will break through this long-standing resistance line, and that would signal yet another model that would come in play. And of course, the two models that we're looking at is how this final fifth wave will terminate, because we have two basic models. One that's looking for a low approximately equal to the low of 3. That's a bear market truncation or a truncated fifth. In something like that, we could have completed it actually at this point, but we wouldn't have the technical evidence that we have completed it until, if and when, it broke through this long-standing resistance line. Now, when I go ahead and compress the chart, you get an idea of how long this resistance line has been in play, because we're going back here to October 2012, the end of 2012. This is the last time we had $1,800 gold, and when we simply draw a resistance line by lining up these tops here, these come right into play. And so our question is, will this be more of the same? Meaning, will it have come up, and at that point that it has come up, then start to get a little bit top heavy and trade lower? Now, let's go ahead and compress this chart a little bit more so that you can really get a much better idea of what I'm looking at, and you can just see how closely we are to this particular point. Now, you also have a resistance area at 1249, and this is a 76% retracement, and it is of our longer retracements. The long retracements are here, mid retracements and short retracements in terms of time sequence itself. So to me, The jury's not in yet. They're still in deliberation. We're very, very close to the top of that, but at the same time, we've seen some pressure. We've seen the market back off. Is that part of a sub-count cycle, or have we hit ultimate resistance and will now complete the fifth of five? Meaning, we had 1, 2, 3, this is 4, and then we get our fifth wave down. Our fifth wave down at the lowest I would look for would be about 1150. And that's because that is our 61% retracement. It's a 61% retracement of a very, very large move. It's our widest retracement, so to speak. So at least for now, it absolutely appears as though we're finding resistance in this area. We'll have to see how this unfolds probably through the beginning of next week. We'll see what kind of indication we get on Friday or tomorrow. And then lastly, for our gold charts, we are looking at our weekly. Our weekly has our intermediate count, of course. And this is a very, very crude resistance line. It does go through a couple of tops. But the whole idea here is to really chart and look at where this market, when it has come butt up against that resistance line, has backed off. And it is just as valid here and here. I see no reason right now to believe that it will not be valid right in here. But as I said, we'll have to see how it unfolds. We have weathered that high at 1253, 1254. It has backed off that. We did have lower pricing overseas last night, but that firmed up today. Now, traders, we are looking at a daily chart. This is a spot market of silver, and it is the chart that we typically use. I will look at the dailies more than the intraday work in silver, and when we look at it, the one thing that we have defined is this congestion area where we've seen it trade in a range. We've talked about that. Now, when I looked at the high, and this is, of course, this is our high back on the 13th on our daily chart, and we get a high print of approximately 1247. Our stop was at 2047. Our stop, of course, was just above 51 or at 51. And so I incorrectly stated that we were not stopped out of this trade. Now, when we look at the intraday chart, and I'm going to pull up our 60-minute chart of silver, we see a completely different number in terms of our high. And the best way to do that, I believe, is to pull up the crosshairs just as we did on the prior daily chart. And when we do that, there is 2061. There's the high print that I did get emails about. I find it odd that it's not showing up in my daily work, but lo and behold, when we look at this chart, that's the high. We will mark ourselves as stopped out at 2052. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.